indicators, right? So the first thing that we're going to do here, I mean, there's 100 different ways, like Eco Rick, what up, baby? There's 100 different ways to trade. There's all types of ways to get in there. You know, the system that I have here is really just for the beginners, the people who want something so solid that, you know, it's just always wins, right? So we've been trading live for the last 5 days, and I'll be trading live until March. And basically what it is just to show people, how to use indicators that we have, help my students trade live with me so they can make money. And that's pretty much it. So let's go back and take a look at the indicators, and I'll show you what we're doing here. So the first thing that we got here is on this indicator setup. As we see here, we'll come off of a short, and let's go to when the short ends, right? So right here, what's up, peeps? Yo, Lou Julian, what up, son? How you been, brother? Yo, hit those like buttons, man. Share the live, man. We're about to go over a bunch of like little secrets, and if you guys can figure them out, then you'll make some money. If you guys want to get in the trading course, let me know. We're running a special $5,000 trading course for $1,000 right now, only for the next 5 people. After that, we're filled up. All right, so I gotta make this video real quick, and this is for my people in the trading side, right? So right now I'm gonna make a video for the students that have the indicators and are already set up. So let's say that we are in a short, right? So here's a short signal. This short signal came in at 40 cents, right? Now, the reason why we go into this short is because as we go along, we can see that we have our RSI right here breaking down, but more importantly, we have our volumes right here that turn yellow, and this is one below, right? It went down below, and that means we're going to sell here. So this is very important to pay attention here, because this is going to be, let me make that a little bigger. All right. Make sure you guys can see that. So these indicators all have the same thing. So there's another thing that we're looking for. So the first thing that we're going to kind of walk ourselves through are the triggers, right? So let's go to an entry. So let's say we're in a short. The short's on its way down. We're riding the volume because we're riding the red volume here. And the red volume is going to come all the way down, and we're not getting out of our short until we see a reversal of the volume, right? So the first thing that we're looking for is, where the volume is, right? So as we come down, the first thing that we're looking for is a triggering of like either a buy signal, volume change. You see this volume turn green right here? So this volume turn, let me see if I can give you guys a better, there you go. So right here we have this green volume right here that pops up, right? Now that, if I look up, I see my RSI is already kind of what we call to the 100, right? So if you take your trading view and you put a line, you want to put a line literally at the 100 range. And what I mean by that is on the side of your trading view, you'll see right here that you have your gauges, right? Right here's your gauges. So you open up your trading view with your mouse and you roll up, and you want to go to what's called the 100 stage, right? So go to the 100, and there's a little plus sign. On the plus sign, you're going to hit the plus sign on trading view, and you're going to add a line, right? So when you get to 100, as close as you can, you draw a line, and now we have that line up there. The other line you're going to draw is a 60 and a 30. Now, we're going to put our mouse over here. We're going to drag this down. But while we're doing that, we're going to open up over here our mouse to the side, and we're just going to rotate our mouse up, and we're going to open our window. You see us move it up, it goes up, move it down, it goes down. I just want it inside of the window so I can see. All right, so now that's all set up. So now let's go through here and basically walk ourselves through a buy or an entry, right? So here we go. We have our signals coming up, right? So our sell signal here for our short, we have to look for a couple things, right? And the first thing is going to be when you're in a position, you just want to take profit, right? So the very first thing is you just want to be in the mindset that you want to make money, right? So this particular trade here, from top to bottom here, this was 40 cents entry, and then depending on where we get out, but right here anywhere in this zone here is 32 cents. So that means that that's an 8 cent movement, which means that's 16%, right? So you can always just cut that in half and say, okay, that's 8% profit, right? So if you're trading at $1,000 with a 10x margin, that means you made 80% profit. If you were trading spot, right, meaning no leverage, nothing like that, that would be 8%. So if you had $1,000, you would make 8% of that, right? So that means that you would take in, what is that, 80 bucks? So you take in 80 bucks, right? 80 bucks. So you take in 80 bucks, right? Because 10% would be 100. So you take in $80 on this trade. Now, the key to leverage, right? Actually, it'd be more because you're not paying any fees. So if you're on spot, this little move here would be 16%, right? So spot with no fees means if you had $1,000, you would make $160 profit, right? Because there's no real fees on spot. Now, I use leverage, right? So $160, that's a good spot entry and a good take for $1,000. I mean, $1,000, $160. This trade is June 10th to the 13th. So what, 3-4 days? So $160 in one trade, 3 days, right? Now, the reason why we use leverage and futures for leverage, a 10 and a 20, we use a 20 because of this. This move is 16%. If you use leverage, you cut it in half because they're going to take 50% for fees, but they're giving you a 10x on your move. So 16% gets cut in half to 8%, but it's times 10. So this is an 80% move, okay? Meaning that if you had $1,000 in here and it moved all the way to here, 80% of 1,000 is $800. So this one move, instead of making $160, made you $800, okay? That's the importance of using leverage, and that's just a 10x. Nothing special, nothing super. I teach and educate everyone to use a 20x because we wanted, we like to double up, and then we don't have to have such big movements to make money. This just happened to be a nice big movement, so we would have actually made $1,600 on this movement, right? So you can't beat that. 2 days, $1,600. Yeah, you're only investing $1,000. So when I put $1,000 in, $1,600. So I doubled my bag, and I have an extra $600. So I almost tripled my bag right there. I almost got a triple out of my bag. Okay. Now I'm not going to get into all the other things as far as like how to maintain your triple bag. That's a whole nother lesson that comes with trading courses, mindset, all that other shit. Right now, I'm just going to keep this video for training the guys in the courses on how to use these indicators. Okay, so now when we're down here, what we're looking for to sell out of our trade is we need the volume to turn and start to hit the top, actually start to go the other direction, right? Now, once this is turning yellow, I see that I'm losing volume. So that's the first indicator that I need to start thinking if I need to get out of this short. So normally the way it is once you hit a particular target and you see this pop up and you see this first indicator turn yellow on the upper side of this threshold. Let me see if you guys can see this. Yeah, so right here, you see all my volume started to go down and this turned yellow, and then it on the top side of the middle of this grind, it's starting to develop here, right? And what that's going to tell me is I need to start getting out of this trade, right? The second thing I need to look at is my RSI, right? So if my RSI was way down here at the bottom of the range, that means that it has a lot of room to push up. So more than likely, it's going to get a lot of green volume here at some point, and so that's an indicator to get out of the trade right there. But since this RSI is only like at the 60, that still has a lot of room to run. So that right there would indicate that I should get out of this trade. The third thing, so here's the first indicator of ending the trade. You get a volume button above the top of the middle of the channel. Now the next move is to check your RSI, right? Your RSI has room to go up. If it was at the very top here, like for instance over here, then I wouldn't worry about it, because if it was here, that means it has some room to come down, which means that there would be selling pressure. But because there's room to go up, this is the second indicator that I should start taking profit here. The third indicator is when I come up here, and you see this little white line right here, right? So here's a little thing that you want to do. This is our, what we call a 10 moving average, right? This is the 10 moving average. Now the 10 moving average is important because that gives us insight as far as the coin and the trend. So since the 10 moving average is normally, if the coin is on the bottom below the 10 moving average, then we're in a downtrend. If it's above the 10 moving average, we're in an uptrend, right? So then now that I'm looking here, I'm seeing that I'm starting to become orange right here, and it pops up. So if I go look, as you can tell, when my orange pops up on top, right, and I look at the coin, this candle is forming above the white line, right? You see it forming above. Let me zoom in on this, man. Make it a little more perfect. Okay. So right here, you see where the yellow is starting to come, but the coin is still below the moving average, right? So I don't worry about it. But when this starts to develop above, and this one's slightly on top, when I look at the candle, these two candles have gone above the 10 moving average, which is my white line. That's the 10 moving average. So right there, that is going to let me know that I should be, taking profits at this point and starting to close out of here, because this is kind of getting to the point where it could jump up, right? And it's okay to take the profits in here. Now, the other thing I would look at is that when I'm looking at this popping up, I would look at my RSI. You see how tall the RSI is right there? So right here, we're starting to see the RSI is getting close to the top of the 100 mark, right? So what I could do here, if I wanted to get a little more greedy, is I can let this RSI finish its movement up, and all I really want to do here is protect my profit. So I would let this candle roll, and then from this candle, I would wait for one more candle because my RSI is at the top here. Now, most of the time, right, depending on how much percentages you're actually, and hit that like button, boys. Look at those likes up, man. We need 1,000 likes, man. We're giving out some juice here, man. This is some winning. This is how you make money in crypto, man. No financial advice. This is just trading, right? But you need to jump in here, man. Get them like buttons, man. Share this live. You got to share the live. Let's go. Let's go. Get them likes. Share the live, right? So people, you can help some people out here. You're gonna get some love here, man. Hit that like button. Hit that like button. Let's go. All right. So now at this point, I would be taking profits here just because I'm already in so much money that there's no need to be greedy. Now, the other side of it is since you do have such a big win, you can also take risk. Now, if this was a move and it only, let's say, made this is for you right here, Mark. This is your video right here, bro. I'm about to send this to you. So hang tight, big dog. So on here, when you have so much profit already made, you can basically take a look at your RSI. So your two options here. Do I get out as soon as this turns yellow up above, or do I stay in the trade? And our decision's going to be made on the fact of the RSI. So the next candle comes in, it is above the 10 moving average, and you see right here, you're getting a slow volume, and the RSI is towards the top. So since you have such a huge percentage, 16% wins here, gains, that what you would do is you would just simply take the risk of letting the RSI come up and then come down a little bit, and that's where you would be planning on making a decision whether, where to grab this drop or this retesting of the you see these three candles here? You got the candles that came all the way down, dipped to here. Then you had the candle come up, and you had a third candle come all the way down. you're going to look for this candle right here, the middle one, whatever one ends up being the middle, as the next retracement, or the what we call going for the profit on the next move down. That's kind of where that target at 30 cents and 4/10 of a penny is going to be the target for the retracement of the fake up and then the push down. But once that target hits, you know, that's where you want to say, okay, that's where I want to keep kind of like my profits. I want to get out of here. So if you go up to here and you take a look at here and you have 32 cents, 33 cents, your stop loss would go on the top of this candle right here. So here's your moving average, right? Once you see your candle breaking above this 10 moving average, what you would do is you would just go to the biggest candle over here, the top candle, the full body, and you would go to the first candle top right here, and that would be your stop loss, right? A full candle, stop loss would be there. So stop loss would be 32 cents and a half, right? That's your normal stop loss section, all right? You would put your stop loss there, so that way you're protecting all your profits, and you would say to yourself, if it goes above 32 and a half cents, I'm going to take profits no matter what. So now that you have so much percentages, you're letting this come by. Now, rule of thumb is most of the time when you see your volume start to push up and you see it break above and your candle is above the moving average, that is where you would be taking profits. Normally you want to take profits as soon as you see this candle turn yellow here. And if you look at that, that candle would have took profits at 31 and a half cents. So that would be there. Yeah, you're going to get that link to the Discord, big dog. Hold on. And so this right here is going to be where it takes profits right there. And you'd be happy because you'd be up 16%. Now, this is our first sign of taking profits, especially if you're only up, you know, if the coin has only moved 1 or 2%, that's the first sign of taking profits right here. Okay. Now, if you want to risk it on a huge gain and you want to keep rolling it, you would allow the coin to play out. You would set your stop loss in this section over here, and you would let the RSI. The only reason you would risk it is because the RSI is already so high. But if the RSI was way down here, then you're not risking it. You're taking profits right away because you have all this room to run, right? And you're above the 10 moving average, right? Now right here, when this coin popped up, this volume turned. You looked over here, the coin was still below the white line. Okay, so you're not above the 10 moving average, which means you expect it to reject off the 10 and keep coming down. It has to break the 10 moving average for it to be basically a threat of going higher. All right. And since it doesn't, at this point, we don't worry too much about this yellow right here. We just move to the next motion, the next candle. This one is showing breaking of the 10 moving average, so that makes us worried. And now this one broke the 10 moving average, right? And this is where we would take a look at our RSI. And if the RSI is let's see, right here, this RSI is at a 91. So if it's above 90, right, and it's at a 91, if it's above 90, you would normally wait for the next candle to kick in, but you would put a stop limit right there at that 32.50, and then you would let this coin finish out this candle. And as you can see, it starts to lose volume again, and it starts to move back down, and now it's breaking below the 10 moving average again. And at this point, when it breaks back below the 10 moving average, this is where you're going to be looking for that profits we were talking about on this candle, or even this middle lower candle here at 30 cents, right? That's where we would set our take profits. The candle comes down, and that's how we hit our target right here. So yeah, this candle hits that target, and that's what you're doing right there. You're not going for this long wick, you're going for the second longest wick, right? Which is this wick here is your longest wick. This is your retest wick. And that's where you get the retracement. It comes back down, and bada boom, bada bing, that's your profit. Okay? After that, what you're doing is you don't need to be any more greedy, or you can be happy with that. And you can take a look, and now if let's say you get greedy and you want to run this entire thing out, right? Now you stay in the trade. It drops down. You see this volume down here. This is telling you you're still in a short. Hit that like button, boys. Hit that like button. You're still in a short here, so you're okay. But this time, when you see the volume change again and it turns yellow, right? Now you're seeing it turn yellow, which is telling you that you need to take profits. Now you're at this level here, and you're at 31 cents, right? But more importantly, look where your RSI is. Your RSI is at 80, right? Which means if it was above 90, you would take the risk of it coming back down, unless there's a green volume like this. But here you could take the risk and you could wait for the next candle. But since your RSI is above 80, right? So let's go through the steps. Turning yellow, RSI below 80. Both those things mean that we're probably taking the profits on the trade. Then we move up. This candle right here is breaking above, or it's starting to move and break above the 10 moving average, right? So this is where we would say to ourselves, like, okay, this is where we're going to take profits, because we've already had a moment like this already happen right here. So that was the fake out, and then the retracement, and then this one is probably going to be the breakout, right? So this is where we would take our profits right on this candle here, because we're yellow, we're pushing up, and then we would put our profit taker at this 10 moving average and slightly above it. So you would say, like, you see the biggest red wick candle right there, you'd be looking above here at 31.78ish right here, and that's giving up 2%, which is 12% of your money, so about 120 bucks on $1,000. But worth the risk if you're trying to stay in a short. But the guaranteed out, meaning that you're done taking pressure, is when this volume right here turns green, right? You see this green right here? As soon as this turned green, right, that's our sell. Like, here it is. It flipped on top. It's green, right? The volume's green. We go up. The RSI is at 84, below 90, and there's a buy signal, okay? So now we have a buy signal. Now we have a green volume signal, and this candle is breaking above the 10 moving average, right? So that's 3 indicators that are telling you to sell your trade, okay? Take your profit. So that is the movement, right? So let's go through that again. You need the volume to be green or above as soon as it goes above the 50 line, where it goes from being a sell to a buy, and the candle has to stay below the 10 moving average. If it's above the moving average, you would take profit. So this profit would be at 31.50, right? And if you go over here, it's the same profit level on this next candle. So if you would have stayed in, you're pretty much getting the same target for profit. You just took the risk of losing more if this jumps up ahead. But by staying in on such a big profit, you had the opportunity to, hopefully get another drop. But it didn't drop, and you ended up, even where you were anyway. So you didn't lose, you didn't gain. You're in the same spot, but you had an opportunity to make more. But now we go to here, and you have a very simple thing where, yellow, it turns green, and then that's out. You're out your sale. You have your buy signal, you're breaking above. So let's go through the 3 steps. Volume above the 50 mark on the volume, the coin above the 10 moving average, right? The 10 moving average, and RSI below the 90, right? Profit taking, no big deal. Move over here, same scenario. Green, profit taking. RSI, buy signal above the 10 moving average, profit taking. Like, that's how you close your deal. That's how we're going to do it. So I want you to go over that again. If the volume reverses and the signal reverses, and the 10 moving average, it reverses. That is get out of the process, get out of your trade. Okay? Now, let's go over, when you're in the coin, why you should rebuy in, why you should go long, like reasons to think about, like should I get in? Let me see here. Should I re-enter the next one? So kind of like giving yourself the ability to like say, okay, when do I get in the next one, right? So that's kind of like the whole movement here. So when do I get in the next trade? Is this something that let me fix a little bit of this. All right. So now let's go into, once you're out of your short, let's find a buy. How to buy, right? That's probably the most important thing. So let's start, lesson number 1, how to enter a coin, right? So the first thing you're going to do here, guys, hit the like button, bro. Let's get these likes up. Let's get the likes up. So now we're going to go into how to enter a coin, right? And entering the coin is going to be based on pretty simple simplicity here, right? So the first thing we're going to do is we're going to look for the indicators and everything to be set up properly, right? So Mark, this is since you're on here, you're going to get this video anyways. So Mark just joined one of the trading courses, so this is one of his training videos he's about to get. So first thing here is go into how to buy into a coin, right? And this is a little bit different because the buy has to have a full system, right? So the very first thing is that we operate on the 4-hour, okay? So we look at 4-hour charts, and that's how we trade. We trade off 4-hour charts. Now, first thing we're looking for is obviously a buy signal, right? Now, this XRP ready to pop again, you figure? I'm about to get to that, Stevie. I'm about to get to that. So if I see a buy signal, right? Here goes my buy signal. I have my green volume, right? You see my green volume. And then I look at my RSI, right? See how high my RSI is on my buy signal? See my buy signal? You see my RSI is touching the 100 level? You see that? So right here, even though this is green and this is showing me volume, right? And this is on buy, your RSI is at 100. Now the weird thing about this is that, when we're trading on such a high time frame, we can still make money on our signals that are, too early, not super strong. And this also comes down to understanding what coins we're trading. So this would be a XRP coin, right? So this is going to be where we can, get a good percentage. And I'll show you what I mean. So this buy signal has a green. Our RSI is oversold. So let's say that, you miss that. More importantly, you come up here and you have a buy signal. Now, there's 2 lines here, and one of them is going to be your trend line that you guys have. And this is the one that you guys turn orange and red, green and red. And the red means that the trend is still down, and the green means that the trend is up. So right now our main trend line is still red. So that means that this is a weak move, or what they call a fake out from its current position. So its current move is a short, you see, because we're in a short. Now, this is a buy signal coming in trying to tell us that it's possible reversal, but we are still in a trend down, right? We see our red line. So even though we have a green volume button, our RSI is already oversold, and our red trend line is in a red, which is a no buy, and the coin broke the 10 moving average, right? So the sad part is if you make a mistake, right, and this is why we teach our people to take what's called a 12% gain, right? So the object is, if you have $1,000 and you have it on a 20x, that means every 1% a coin moves, you make 6%. So if it moves 2%, you make 12%, right? So this move here, if you buy in when it breaks above the 10 moving average right here, and you see it, the moving average is the white line. So you see how it breaks above the moving average, and you got a buy signal, and your volume is green. So 1, 2, 3 indicators saying that you can get in this trade. This trade would get you in at, let's say you get in slow and you enter at, I don't know, 32 cents, right? And it runs up. So the way XRP works is that at 32 cents, every 0.3 of a penny is 1%. So you would need this to move, let's just round it up to 5/10 of a penny. So at 32 cents, I would, a half a cent, 5/10 of a penny is a half a cent, half a penny. So this would have to move a half a penny for 1%, a whole penny for 2%, and that 2% would give me my 12% gains. So I need this to move up to 33 cents, right? So here's your 33 cents, which is right here, and that's my profit right there, right? So I would take profit at that level right there. And the thing is that at that current moment, I'm still in a buy because I don't have any of my indicators saying no. So let's say I stay here and I get in at 32 cents, right? It goes up, it's above the 10 moving average. It goes up 4 hours later, you know, and this is how you make money. And I always want you to remember this, Mark, is you need to put in your stop loss, okay? So your stop loss is going to be once you see this movement happening and you get it above your profit zone, which is basically your 32 to 33 cents, you would move your stop loss up to your, you would move it up so that it would pay for the volume of the trade, right? So which would be, if you're getting in here at 32 cents, right? You would keep your stop loss at 32 cents, right? Just in case you have any type of pushback. So once you have that big move up or whatever, just when you first start off here, your stop loss at 32, you're gonna move it down and you're gonna take what's called a 10% loss, right? You'd always factor in 10 to 15%. So that right there would be on a 31 cent area or 32 cent area entry, you would be at 1 penny. So you would be 1 penny back, right? Which would be 31 cents. So your original stop loss would be 31 cents. Now, as you move across here, you have your 32 cents and you see kind of it moves up here and it gets up to, it touches 34.5 cents, right? Which is a nice little gain. Now at that level, you know, if you're setting your profit taking, right, you should always have your profit set where at 50% of your investment, right? Not financial advice, this is how I trade. So how I trade is I always set 50% of the move to take profits, right? So this way, no matter what happens, I have made a level to what can traders trade through TradingView with a linked account. A linked account. Can a trader trade through TradingView with a linked account? What do you mean by linked account? Oh, a link brokerage? Yeah, you can link brokerage. You can put link brokerages. You can put you can attach brokerages. You can attach like trading bots. You can attach. I mean, you can attach everything to TradingView. TradingView is just an app that you know you can literally put everything on there. It's not that big of a deal. All right, so now that we have our move up here, right? We have our nice little move up. It pushes up pretty heavily, and you know we were looking for 32. We were looking for 33 cents. Here's our 33 cents. And all you do is set an alert on TradingView, right? And you go here to 33 cents. You go to the right, you hit this little plus sign, and you just basically put on here, add an alert, right? Add an alert, and then you add an alert. So go to your right, there's a little plus sign, you hit it, you put an alert saying that when it triggers your 12% gains, which would be 32 to 33 cents, you put an alert so that you're aware that it triggered. And then what you do is you move your stop loss up to 32 cents, which is your original entry, and you take 25 to 50% profit on that move that you're in. And this move would have been keep going up, and then when you hit another percent, which is simply a half a penny, which would be 32 to 33, 33 to 34, which is another, you double your profits again. You would take another 25%, and then from there you have that big run push up, and you would basically keep your stop loss at your 32 cents, your entry point, because you've already taken profits twice, meaning 25%, 25%, and now you have half your money in, but you have already taken your profits and you've covered your investment. Now, the other half comes back down, and this is how we know when to end the trade, right? So the next candle, right, you see the volume down here? So the volume, how we're going to end this trade is very simple. The moment that we see a non-green volume move, right? And the reason why we're going to end it early is because you see the trend line that we were talking about earlier is still red, right? Which means that this coin is in a red downward trend. So I'm not going to expect it to really break out higher than it should, because it's in a red trend. I mean, it's down. So as soon as this coin goes up and I make my profits, the moment that I see a yellow or a yellow volume button, I'm going to get out of it. So here's my first push. Here's my second candle. It goes all the way up to 34. And when it comes down, and this candle comes, and then this candle hits. This candle is that yellow, right? You see that yellow right there? So right there, when this candle hits, I would be closing out my position, and it would be somewhere in here like 32.7, right? Which means I finished the other half of my investment at 5%, at half a penny, which is 1%, which is 6% profits. So at that point, if I'm doing $1,000, I'm doing $1,000 times 10, right? Meaning that my 6% right here is my profit margin, and I would get out of my trade right here. So this little trade here on $1,000 would have bring in 10, 6, 12, 18% gain. So $180 on your $1,000, and then you would have traded out here for another 60. So $220 on your trade. So that's not a bad trade. So that right there that's a simple small trade, but that's not the trade we're looking for to get in properly, right? This is kind of like a swing trade. This is why it's important to trade on 4 hours, because even if you're in a weird trade, you still make a little money. Now, what we're looking for the trades that are, the big dogs, the ones that are going to like really do something. So we would just go along here, and since we're out of this trade right now, here's the key, guys. Here's something you guys can learn. Once you're out of a trade, like, just stay out of the trade. Like, once you've decided that you're selling, you sold. Don't get back into a trade. Don't make another trade until you have a signal. You're waiting for your signals, right? So we'd go along, and then we'd eventually come to this scenario where our downward trend line is still red, right? So this means that this trend is still going down, and then all of a sudden we see our volume down here start to turn red, right? So here's our volume turning red, and this is volume at red, means that we should be getting ready to go into a short. We come up here, notice how see this white line? That's your 10 moving average. It fought the 10 moving average, it broke below it, it got rejected right here, and now it's fully below the 10 moving average, and you have a solid red volume, and the RSI is at the 30. So you have all this room for it to make you money. And this is where we would be looking to enter a short, because we are in a short already with the downward trend and everything being there. So this is a possibility of getting a short, and this would be another small play. So you'd be looking here, it would come up, and then the short kicks in at 31 cents, right? 31 and a half. Now, we get out of this short basically the moment it turns yellow, right? So that's kind of what the first thing you want to do as a rookie trader is you just want to start selling out of your positions when the volume changes, right? So here we go. We're coming down. What do we got here? 30, 31 cents. Let's just call it 31 cents. It goes along. Here's your RSI's down. And now this is another scenario where it's a short trade, because this isn't a perfect trade yet, right? This isn't a perfect trade. This is a trade you want to make sure you put your stop losses in, because technically, if we look at this trade, let's go through all the things. We are breaking below the 10 moving average, right? Which is great. We do have red volume, which is great. We do have a red trend line, right? Meaning that this coin is going down. That is great. Those are 3 winners. But the RSI is below the 30, right? It's already below the 30, right? Meaning that there's only so much room to the bottom. So 30 to 100, that's nothing. That's like a 30, that's a minimum 30. Not a perfect trade, but it's a trade that could make you money. But you need to, as soon as there's a big drop, as soon as there's a big wick, you have to close out of that trade, just because the RSI is already at the bottom, right? You see this RSI at the bottom here? Anytime the RSI bottoms out on a short RSI move, this little move here, just take whatever profits that is right away and say, okay, that was interesting, right? Don't get greedy, man. You gotta chip away at the boulder. You gotta chip away at the boulder. So this right here is we go into our sell, we get our sell sign, it's 31 cents. It goes down, and then we see the RSI crack and start to come up, right? You see our RSI start to bend, and then we see our volume change, right? So right here, you get a green candle on a short move, right? And you say to yourself, all right, so I'm probably gonna, I'm not feeling comfortable in this little bit of a trade. Let's say you got into this trade and it's not the greatest situation. It went too early. These are the mistakes, right? Listen to what I'm saying to you. You have a sell sign. You're underneath the 10 moving average. You have a red indicators telling you that it's a downward trend, but your RSI is below 30. So I don't like this trade, and I don't recommend this trade, because your RSI is below the 30 and it's still heading down. We want to get into trades where our RSI is starting to come up. Right? Now, if you're in a short and you're trying to find a short, you want the RSI to be as high as possible and then find the trade to a short. If you're in a long, which we're looking for, or a position, is that we want the RSI at the bottom and going up. So this sell sign, even though it triggers, it's just one of the many indicators that you have in your trading courses, right? This is just letting us know that there's some downward pressure. The trend line is red, so it's like it could say, okay, those are 2 things that are winning, plus it's below the 10 moving average. That's 3 things that are winning, but my RSI is already below a 30, so I would avoid this trade, because I like the RSI to have, some type of movement available to make money. So this is a trade that I would kind of avoid, just because it doesn't have all the factors that I need, right? So the RSI is very important when you're doing trading. It's Brenda Brownie. It's basically it's the movement of how much pressure is for sales, et cetera, et cetera. So it's just, when it's already on its way down, there's not going to be too much more sale pressure. So this is a trade that I would not do. So even though you see the sell, even though you're below the 10, even below this is a red, letting you know that this is a downward trend, and all that looks good, the RSI is already below 30. So I'm not really feeling this trade. You know what I mean? So I would pass on that trade. Now, as we come along, right? Here we start to see an uptrend, and as we go along, we get a RSI movement back up, right? Now it's at 100, right? Now this is the same scenario. The reason I didn't take the sell button here is because the RSI was already below the 30 and heading down, and you know, there's just not a lot of movement there, so I'm gonna wait. And then here it goes, it's reversing, right? So here's your reversal. It bottoms out and starts to go up. If you did take that short, you would want to get out as soon as you see the RSI bounce up. So as soon as you see that RSI start to make a move upwards, I would like get out of that short if you're in a bad position, right? This kind of information helps everybody, you know, if you're in a thing. But for us, when you're trading, we want to be in a perfect trade, right? So the first thing that we're going to do here is we're looking for that perfect trade. So now let's find the trade you should enter, okay? Let me say that again. This is the trade that I would enter, right? So the first thing is I go along and I look and I see my green volume, okay, trigger number 1. I go up, I see where my RSI is, and that's at the 50, so we got plenty of room. And I go up and I see that I'm above the 10 moving average, and I still have a red trend line, right? You see my trend line right there? You see how my trend line is still red right there? You see that? I see my trend line right here. Let me pull it all the way over. See the trend line right here is red? So now that it's red, it's still red. I'm not in this trade yet until that changes, because I need all of my indicators to say go. So now the buy signal pops up, which is okay. My RSI is already at the 100 mark, so I don't like that. And I'm green, so I got one green, that's good. RSI is too high, that's bad. I got a buy signal, that's good. I got a above the 10 moving average is good, but my trend line is still red. So I'm not going, the bottom indicate, what's up in the money? So this is part of the $1,000 course, bro. This is like all the indicators put together for trading. So right now I need all 4, right? We want 1, 2, 3, 4, 5 indicators all hitting on the same cylinder for us to make a trade. Right? So right now we have 4, but we're still in a red trend, right? You see that red trend right there? We're still in the red trend. So we're not getting into this trade yet because we're still red. So now this candle goes up. It comes back and does a retracement. We're waiting, and then all of a sudden, the trend line turns green. You see right here? You see the trend line turn green right here? So now that my trend line turns green, now I come down and I say, okay, I have volume. My RSI is now not at the top of the roof. It has come down, and it looks like it's bouncing off. This little dotted line is the 80. So now it's starting to come down, which gives me room. And as soon as I see this trend line change, this is where I would be getting into a long, which would probably be about 31 cents, or maybe even up here, you know, 31 and a half or 31.8. But this is where I would be going because I have green, my RSI's down, my trend line just turned green. So trend line turned green, volume is green, RSI is down, my buy signal already triggered earlier. So this is where I enter. I would enter on this movement right here. This is what I'm looking for. All right, and I'm above my 10 moving average, right? So this is where, when that triggers, I would be buying in here somewhere, preferably, you know, probably somewhere in this mark here, about 31.90 or 32 cents, right? Because all my indicators are hitting. Once again, a buy signal, green volume, RSI is down, trend line is green, all of the signals, white 10 moving average, we're above it, right? And here's your 20 moving average, right? Coming down, so we're looking good, and this would be a buy. So in here, I get in at 32 cents, somewhere around here. And that's pretty much a go right there. This is the perfect trade, right? So let's say we get here at 32 cents. Let's say that you want this candle to go from red to green and you wait for this candle. This candle comes in and it's green, confirming that we are on an up move. This still is 31 cents. And then you have your 20 moving average. This is the blue line. It's a 20 moving average, right? So at that point, you've got all these confirmations happening, and you could even push it and say, okay, I'm going to wait until the 10 crosses the 20. You see right here? Here's the 10 crossing the 20. Right in there, right? But you already have all these confirmations, so you could wait until the 10 crosses the 20, right, for a 6 confirmation. But the 5 that are already there are plenty. Green, RSI down, trend line green, boom. You're in this candle right here. You get in at 31 cents, 32 cents. Now you set your stop loss. Remember, your stop loss is always 25%, which means you would drop this down. A half a penny would be 6%. Another half a penny would be 12%. Another half a penny would be 18, or what were we on, 10s? Yeah, we're on 10s. 6, 12. Yeah, you drop a whole percent. So you would be 1% would equal 12%. So you would go 2% down, which means that, and on this coin, it's basically 3/10 of a penny. We'll say 4. So you would need this to go down 2 half a pennies. So you would need to go down a penny, and then you would go another half a penny. So you'd be at 25-30% basically stop loss. So that would be at 32 cents. That would be 31 and a half. In that zone there. So when you enter in here, you would be going here. Now another easy way to do it would be that you would go and find the body of the biggest like orange candle that you're in here, and you would rotate down, and you see how this drop down here, you see this big wick drop down. Normally you would set your stop loss at that, what they call this is kind of like a liquidity wick, right? Yeah, liquidity wick. Now you don't want to be pushed out, Mark. You don't want to get pushed out of a trade that you're already in, especially when all those indicators are winning. So like you see this long candle have a liquidity trade right here. See how I try to suck up? This is at 31.35, right? So this is why we would drop below that, and we would go where this candle entered here, and we want to go at least to 31 cents, because our entry is going to be 32, and we're going to go down 3/2 of a penny. So 31, so 30 and a half. So 30 and a half is a good little margin way down here, but you don't even need that much. You can just go off your liquidity candle and say, okay, liquidity is at 31.35, and this dropped down to that candle bottom right here where the entry was, right? So that entry was 31.14. So you can go to 31 cents. So that's a penny. That'd be 6, 12, 24%. So 24% is your average stop loss. 24%. That's your average stop loss. 24% is your stop loss, right? So that would basically be on an XRP coin. You'd be looking at a half a penny, 12%. A whole penny is 24%. So if you're in at 32, you would put your stop loss at 31. And then when you just come down on your 31, you will see that 31 is way down here, and you can look around and say, okay, does that make sense, right? So here's our 31 cents line. And now I can say to myself, like, okay, is that below the liquidity line? Yes, that's way below the liquidity drop. Okay, we're safe. Is that below the next tallest buy candle option? Yeah, that's below the candle next to it where the original buy happened, right here. Okay, that's below that. So this is a very, very safe stop loss. Okay, so now that we know our stop loss is safe, everything's good, well, that's where we go. So we get ourselves in there. Now that we're in this trade that we actually want to be in, the perfect trade, now we're just counting the money. Okay, so now we just have to say to ourselves, all right, I have $1,000. I'm on 20x margin, right? Don't go higher. You know, you want to stay at 20. Don't do 20. Don't do 30. Just doing 20. And now that we're in at 32 cents, right? We're in at 32 cents. Let's say we get into this candle here, somewhere a little bit lower, but let's just say 32 cents for the hell of it. Now, we're watching our movement, right? So now as our movement starts to go, and we're starting to move, we have right here where you see these yellow volume indicators come in. Those aren't a big deal because they're not on the bottom, they're still on the top, and our RSI is still still has room to run. So on a 4-hour, we don't really worry about these right here. We're not going to sell out or take profits unless we get a little bit lower on the RSI. And I'm going to show you how to walk this through. So now that we're in this trade, we're moving up, we're going along, and remember our entire remember the entire goal here is to make money. Okay? So right now, as we're looking at this, we want to get ourselves in a position of profits, right? So finally we have a perfect trade. We have a buy signal, we have green volume, we have our trend line turned from red to green, and our RSI is not at the top of the channel. So now, and we're above the 10 moving average. So we enter this trade the moment our trend line changes and our volume is green, our RSI is good, and we enter at 32 cents. We set our stop loss at the bottom of the liquidity wick and the next candle down, which is literally 31 cents, a little bit below, and now we're in a trade. Okay, so now we want to make profits, right? So the first thing you have to say to yourself, you're calculating the reason why you're in a coin like XRP is because of the percentages. And this is how it works. They're very simple. For every dollar on a coin, so let's say the coin's worth $1, you need 1% movement, which means you would need a penny. So the coin would have to move 1 penny for you to make 1%, right? Now you're using a 10x margin, which means that 1% is worth 10%, and profits on that 10% is 6%. So for every 1% moved, you make 6%. This is why you want a coin that moves 2% so that you're making an average of 12%, and 3% and 4% so that you're making 24%. So on this, we need this to move literally 2 cents, right? Which would be 4%, which would be 4 times 6, which is 24%. 24% of $1,000 on 20x margin is $240. $240 a trade is what we want to do. The reason why we want that number is because we want to make 5 good trades a week, so that every week we double our $1,000 and make it $2,000, and every month we make at least $3,000 to $4,000, so that we can start compounding our investment bag as we move down into 2 or 3 months, so that we can go from making $1,000 to $3,000 a month to making $6,000 to making $12,000. Okay, but it starts by building a good foundation, and this is where everybody fails, is they don't build a foundation. So right now we just want 24% gains, $240, 5 times a week, so that we have our $1,000 making it happen, right? So at least 5 good wins every 2 weeks, right? So that way every month we at least we double our bag twice, right? So let's get into profits, right? Hit the like button, boy, hit the like button, let's go. So now let's get into profits. So profit means that if we enter at 32 cents, we need it to move 2 cents, right? Which is our 24%. So that means that at 32 cents, we need it to move to 34 cents, right? So we're in here at 32 cents. Our target is 34 cents, which is right in here. So that's our ultimate target right there. And then backing up the 33 cents, right? Which would basically be a 12% gain. Let's put that in there, 33 cents. And that's the bare minimum that we want to make, and basically at least take in about 25% of profits, or setting like a stop market or a take profit at 25%. And that means when that market hits there, you're taking at least 25% of your original investment. And what that does for me is that just basically pays for the cost of doing the trade. Now, if I'm waiting for a perfect trade and I'm in a really good spot, then I don't really worry about, taking too much at this position. That's why I only take 25%. That's because it's just covering the cost of doing the trade, which allows that allows me to basically not lose money on the trade. Okay, so on this mark here at 33 cents, which would be 12% profit, we set a 25% take of profit, which is going to cover the entire cost of doing this trade. Now, and on our 24% profit mark, that's where we're going to basically take in, we're going to start looking to where we're at. We're going to set an alert, right? So when that mark hits, we get an alert, and that's going to allow us to reassess our trade real quickly and decide, like, where we're at with it, right? So normally on that second 34 cents, I'm going to do another 25% take profit, just in case I don't get a chance to look at my computer or whatever. I take 25% again of my profits at that level, and then I get to reassess the trade when I can, okay? Now, the key is when you hit your levels over here of 33 cents and you have a 31 cent stop loss, this is where you would move your stop loss up to your 32 cent mark. So let me think of the math here real quick. All right, so we're in at 32 cents. We have a stop loss at 31. Are we 31 in it? Yeah, 31. All right, now, when you hit your first target, right? That first target that you hit is basically going to cover the losses if you go back down to your original stop loss, okay? So when you hit your first target, you don't have to make any adjustments to the stop loss. You just want to hang out where you're at, okay? Now, on the next move, let me show you why we stay in this trade and we don't get out. So here's what we have. We have a push-up happens, right? We're above the moving average. Everything goes well. We trigger off and we make our 25%. We're good. Now, here we have an instance where it pushes all the way up and it comes back down, right? Now, let me show you why we don't sell this trade right away. And it's simply because we're in a 4-hour trading cycle, right? So right here, you can see we start to come along. Here's our yellow sell sign that normally pops up. You see how it falls down below? Now, in order to get out of this trade here, I'm looking at this trade here. Now, a lot of people, right, if you're in this little profit zone here, like this is where you don't panic on here because you've already taken your 25%. You have a stop loss at 31. So no matter what, you're going to break even on this trade. So you don't have to worry about, losing money here because you already hit your one profit take. So now what we're doing is when we see this yellow come in and we see our RSI at the top, right? And you can see like right here, you can tell that this is going to be a little bit of a big drop here because our RSI is so tall, right? And you see right here, we get a red candle pop in and a second candle at 32 cents, or actually almost 33 cents. And in reality, this is a 12% profit area that if you panicked and sold here and took the profit here, you're still making $100. You're making, what are you making? 1%, 10%. Yeah, so you're still making your $100 on your 1,000 right here. So if you panic and sell, you're still okay. But the reason why we're not selling it here is because the reason why we're not selling it right there is because when we get our line here, we've already taken profits, so we have room to gamble here or be patient, right? And as we come down, we don't bounce off of the moving average here, right? You see our white line? We don't bounce out of our 13 or our 10 moving average. You see how it falls below the 10 moving average? And we turn yellow here. So this is normally right here you'd be thinking, okay, I got to take profits here, which is okay. But the reason why we don't is because remember our trend line was red that entire time? Now our trend line is green, right? You see the green? So that's kind of like our, we don't really sell out until that trend line goes, at least goes red on us a little bit, right? So this is still green and it bounces through the 10 moving average. And this is where we're going to use our other indicator, which is this blue line, right? This blue line is the 20 moving average, right? So we're going to allow the coin, when it breaks through the 10, since we still have a green trend line, we're going to allow it to retrace. This is a retracement on or a pullback. This is the retracement on the first move. This is the pullback, right? So the pullback is allowed to go down, and we're going to basically wait for a sell sign, right? We're not going to panic here until we get a sell sign because we still have the 20 moving average, right? So here it goes. It pushes down. We're patient. We already took profits up here, so this trade has already been paid for. We cannot lose money. It comes down. It touches the 20. It bounces. It touches the 20. It bounces, and it touches the 20. And now at that point, I'm feeling really good because my RSI has came all the way to the bottom, right? And this is what it's all about being patient, right? Not panicking, not going crazy. And also, when you're not using high leverage like 50 or 100, you don't have to panic because you're not in a liquidity section, right? You're not losing a lot. So it bounces off our 20 moving average, right? And our RSI bottoms out at the bottom, and now we're starting to reverse. And here comes our yellow again. We don't get our sell signal, we're good. Our trend line is still green. Everything's going well, so now we're back in our upward movement, right? And here we go, we start to move again, and now we break above the 10 moving average, and now we start to see our little push. Our volume starts to really pick up, and now we start getting into, we're seeing these big profits, and here we go hitting our main profit line, and we take another 25%. So now we're definitely can't lose money on this trade. And now when this move happens here, you get this big spike here. Now, a lot of times if you're watching, this is going to be your 200 moving average, this orange line here. And a lot of times that's support or resistance. So rule of thumb is that if you have a coin coming so far down and it's hitting the 200 moving average, this is definitely a take profit zone here, right? So that's where we would be looking here going, okay, I'm going to take at least 50% of my trade, off this 200 line, and I'd be thinking about 30, a little bit below the 200 line is 37.9, almost 38 cents. So I would go down and I would be thinking about 30 instead of, let me see. So the 200 line would be around 37 cents, almost 38 cents. So I would cut that and take a half a penny, and I would go 37 and a half. And I would think about taking, another 50% or even all my profit at 37 and a half, at least 50% at that level. And 37 and a half, I would click profits right there. And I would only leave half of so 25% on my first take, 25% on my second take. That leaves me my 500, and then now I take the other half of the 500, so I'm leaving 250 in to see if there's another jump. But honestly, at this level here, it's going to take a lot after such a move to break the 200 that I'm happy there. Now, let's go over just kind of the percentages where you're at here. You started at 32 cents. You're now at 37 cents. So that's 5 cents. So in reality, that's 10% on the move. Now, with a 10x, that would be 100%, and you get 60% of that. So 100% would be 60% times 2 because you're using a 20x. So 20x. So this move right here just basically did a 120% gain on half of the $1,000 investment, which means your 500 just became 1,000, and the other profits, the 225% that you took, are 24% on 1,000. So that would be 250, 250. So that's 500. So together, this is $1,000 trade that was. Yeah. So let's take a look at the days here. So looking at the days, right? The original entry is June 19th. We're getting here to June 25th. Yeah, so about 3 days. You're about 3 days, 3 to 4 days. That's why we're trading on a 4 hours, is because we're looking for this movement, right? So at the end of this collective of profits and everything that we needed to get out of this, we have successfully made 120% on the bag, which means the $1,000 has made 100% profit, so it's $1,000 plus the percentages. So you made $1,200 in, let's just say, 5 days. Okay, $1,200 in 5 days. We successfully doubled our bag. Now, to get fully out of this trade, so let's say that you miss here and you don't sell here at the highest, and now you start to go along and you're just hoping that it breaks through because you don't realize that it's at the 200 moving average, right? And this is why we do updates, and this is why we share alerts. But one day I won't be here, and you will have to, this is the education that you need so that you can basically understand what's happening here. Is once we hit the 200 moving average, we're going to take profits, right? If you don't take profits, let's just say you're going with the indicators, and you have full green, but look at your RSI. Your RSI is all the way at the top. Your trend line's still green. And now what's going to happen is your trend line your RSI is starting to fall down here. Your volume is starting to come down here. And what we're looking for here is the sell. Now remember, we have already hit all our targets for profit. There is nothing more to make here. There's nothing to prove. So this is the mentality of understanding that you've already doubled your bag, which was the entire goal anyways. So you do not take chances, you do not take risk. You start to eliminate the process of closing out, meaning you don't need all indicators to tell you to get out because you've already made your money. You don't need to take any risk. You're already where you need to be. So at this point, what you would do is you would come in and basically say to yourself, all right, I'm going to get out of here because I've made all my money. Now, if you decide to push it, the thing you have to do here is basically when you see this come down and you see your volume changes and you get this red candle, that's a liquidity drop, right? You see how it dropped down to 35 cents? Once that candle goes back up, you need to go to the body of the biggest candle next to it, right? And this is where you need to put a stop loss, which would be this candle right here. You would put a stop loss on this candle right here, which would be 35.60, right? 35 cents and 6/10 of a penny. This is that level right here. 35.6. So 35 cents and 6/10 of a penny. That's that candle right there. So that's where you would need to move your stop loss up just to protect your profits, right? Now, as we move along here, this starts to move up again, so it does look good. Now, the moment here that you see look at the yellow. So now when we see this yellow volume pop up, you see this yellow volume right here pop up? Since we're already in all the profit that we need and we see this yellow volume pop up, right? At that point, with the RSI being halfway to the top, coming down, right? Here's your RSI already breaking down. That's a signal that this trade is going bad right now. And then it's leveling out, and then you see it breaking down again. That means that it consolidated and failed. So this is a sign right here that this trade is starting to come to an end. Okay, let's go over this again. We made all our profits. There's only so much money in a market. There's only so much money you can make. You've already made all your money, right? We've done what we came to do. We doubled the bag in 5 days. That's the goal. The goal is to double the bag twice every 15 days. Let me say that again. The goal is to double your money twice every 15 days. Okay? Which is for us is $1,000 becoming $2,000, and then we put that, and you'll get this where once you double your money, you take the $1,000 or the profit that you made and you put it back into your trading account as USDT, and you don't touch it, because now what that's going to be is what's called a topper, meaning that you're going to just start off with $1,000 on the next trade again. And if you happen to make a bad trade and you lose some money and the 1,000 becomes 800, you take from the profit, that 1,200 profit or whatever you made, and you top off your $1,000 so that every time you're making a trade, a perfect trade, you have $1,000. Like it's always 1,000. You just top it off, okay? You know what I'm saying? The profit is used to top it off. So the first 5 to 7 days, we doubled our bag, and now we have a topper. Now we have $1,000 to top off the other 1,000. So now we go into another trade, and the ideal is to get another $1,000 in the next 7 days, so to double your bag in 2 weeks. So now that next $1,000 means that we have 1,000 for a topper, and that's probably going to be about 700-800 when if you make some mistakes while you're learning. So you have one bag at 1,000, one bag that's lost 500 if you did bad, topping it off. But then you successfully, in that next 7 days, you did make a good trade that gave you double your bag again. So now you have 1,000, 500, and another 1,000, right? So now you have $2,000 bags and $500 to continue to top off the main bag. Now you do that again, and you do another same repeat process, and you have 3 bags plus an extra 5. So now you have 4 bags of 1,000, and at the end of the month, you should successfully have 5 bags of $5,000, or at least 4,000. Okay. The following month, we are going to then increase the $1,000 up to $1,500 and start to trade like that. So this way, the following month, instead of 4,000 profit, you make 6,000 profit, and then you add 500 to your trading bag up to 2,000, and you repeat the process, and now you go from 6,000 to $8,000 a month. Got it? And that is how you compound interest your money. Plus, you have extra bags being built on the side for spare cash, meaning that when a coin falls so low and there's something like right now, this market's so cheap that you should be taking moon bags. So once you have 4 moon bags, you should be buying like $200 of Gala, $200 of XRP, $200 of Chainlink, $200 of all these cheap ass coins, Jasmine, right? You start buying these, like, we have moon bags that we build, right? And you just pick up moon bags and you just throw $100 in there, every couple days, and you're just kind of like buying every big dip, and then that is adding up. That's just like a safety net, right? But this is how you continue to increase until you get a steady flow after 3 months, and then you're just buying all the dips, and you're like a squirrel just building extra bank accounts everywhere, and you just keep throwing money in there because you're using the market to make $8,000 a month, and $4,000 or whatever, $3,000 goes into buying the dips, and the other money continues to make the same money while you have 2 or 3 bags backed up to replace the bag that you're investing with. to continue your profits. All right? Yeah. So now, and that's what we're going to go over on the next videos. I get you over there. So basically here, let's close out this trade. So now we're looking here. We see it turn yellow. We already made profits. Here's a red candle. It's dropping below the 10 moving average, right? So now, even though our trend line is still green here, because we made so much profit, that trend line now it becomes irrelevant on this trade because there's already oversold, like meaning there's already so much profit. So now we just disregard the trend line because now all we need is for our volume to become yellow, our RSI to be coming down, and we fell below the 10 moving average, right? So these three indicators basically say we're out of this trade at 36 cents. We're out of this trade right here at 36 cents. We just get out. And that's it. Now, going into the short side, right? Since this coin made such a huge move, right? Now you're waiting to go into a short, right? So now the perfect short has to happen, right? So let's wait for that. So now we see that we're oversold here. Everything looks good. We get out of our trade, we sell. But the problem is we still have some movement here, right? And this is kind of where, you know, you don't need to get greedy, even though the indicators right here are still telling you that the trend is up. Let's say you miss the sell sign, you get extra greedy. You know, these indicators are really, really good. So your trend line is green, which means you're still going to get some type of push. So let's say you stay in there and you're like, you know what? That's not a lot of volume. I'm going to wait. My RSI is already towards the bottom. I feel like, you know, we might get a bounce up, and you just fall in love with the coin and you're happy with the profits, and you're like, you know what? I'm going to set my stop loss here at 35 cents and I'm going to ride this out. And so you stay in and you go here and you break the third 10 moving average. You come down, your volume is there, you're waiting it out, you see that the volume's reversing, you feel good about yourself, your RSI starts to push up, right? And you're like, all right, and you turn green and you're like, I knew it had more in it, yada yada, and it comes up and it pushes up, and it's going to reject after the 200 moving average again. And by now, I hope you're smart enough to know that you need to take the profits if it rejects again, because once it rejects 3 times, then it's only down from there. And this is the 4th rejection. 1, 2, 3, 4, 5th rejection. The 5th rejection, 4th rejection, the 5th rejection, that's kind of like the end. Notice how the 4th rejection right there, you see that line? It's the same as the 5th, right? See this? 1 candle, 2 candle, 3 candle. That's normally an indication that they're going to dump it, right? And you come across here, and here's your 4th candle, hits the 200 moving average again. And the 200 moving average is coming down, so that means that the average is coming down. So this is letting us know that we're getting to the point where this is going to change, right? So now we look down at our volume, and you stay in and you stay in, and then all of a sudden you see green, green, and you're like, all right, I'm staying, and you stay, and then boom, you finally get red, right? You get red right here. Now you have a sell sign. You have the 10 below, the 10 moving average, it's below. And you waited to the longest possible moment, which is the red volume button. This means you sell out at 36 cents, 36.2, which is kind of like where we got out anyways, but with less risk, right? Now that it turns red, this is where you're going to look for the short option, right? Real simple. You have a sell button. You have your 10 moving average. Your volume just turned red, right? Your RSI is towards the bottom, which means it's tough to make this decision on a short because the RSI has already bottomed out. Now you'd have to wait for all your indicators, right? So here we go. We have red. The RSI is low. That kind of goes against us. We come up to the top. Our 10 moving average is still coming across, and it's below it, which is good for us, but our trend line is green, right? Now eventually, as we come across, we get everything we need. We have a sell sign, right? Here's our sell sign. The only thing that we're waiting on is the trend line to turn red, right? So eventually, as we come across, it's fight. See how this is fighting the 10 moving average? You see how this is fighting the 10 moving average? Boom, boom, boom. What we just talk about? 1, 2, 3, 4, 5. 5 rejections. And the 10 moving average is starting to fall down. See how it's starting to come down? You see that angle right there? It's starting to have an angle down. That means with the 200 moving average angling down, and now the 10 moving average angling down, this is really starting to look like it's about to take a big drop. And that's right here. You see this huge liquidity drop, and it comes back, and you're waiting, and all of a sudden right here you turn red. Right, here's your trend line turns red. You say perfect, and you get in at that moment, and you jump in at 35 cents, right? Somewhere around here, 35 cents. Let's say the bottom of the candle. Let's say you just jump in at 35 cents. Now, it's okay now, even though the RSI is still at the bottom, because your trend is red, your candle's red, your volume is red, and you have a sell signal. So you have everything you need, everything you're underneath the 10 moving average, and now you jump in and you get in at the bottom of this candle here. Let's just say 35, that's 35 and a half. We'll just say 35 cents, okay? So you get in at 35 cents. Now you're in a short. Now you're going along, your short's going along, everything looks good, okay? 35 cents. Everything looks good. And remember, what are we doing? We're calculating, the dollar is up 69% after hours Friday. What does this mean to you? So who's that? Mushroom? Mushroom head, what up, baby? All right, so with the dollar being up 69%, right, that doesn't favor crypto. That means that crypto is going to take a beating, right? So if the dollar goes up, that weakens crypto and it weakens stocks. So you're going to see a pullback and a pullback on stocks, but you're also going to see the pullback go into the crypto. So that looks like we're going to have a bloody weekend after all the little like fake outs to the top, right? Which is what we're seeing right now on XRP. So now that we got all our indicators and we're in this short, right? We got our trend line is red. We're underneath our 10 moving average and we're coming down. You're going to test the 20 moving average, which is the blue line here. Here's your test. Here's your test. It bounces off and then it retests the 10 moving average, but that's okay because you're in a downward trend. So what you would do here is that so let's say you enter at 32 cents, right? Or 35 cents. Your stop loss, remember, is going to be 20%, which is 34 cents, right? So you would push up to 34 cents, or I'm sorry, 35, it would be 36 cents, and then you would put your stop loss at 36 cents. Always put your stop loss, 1 penny difference on XRP, so 36 cents, so this would be your stop loss here. And then remember, we need to take profits, right? So the very first thing is 12% profits just to pay for the trade, which would mean 1 penny movement, right? So 35 cents, so we need 34 cents. So here's our 34 cents. So this would be our first profit zone at 34 cents, okay? So stop loss, profit, okay? 25% of your profit you take here so that this trade is free, meaning that it paid for all the trade. Now that we have our 35 to our 34, right? Because that's 2%, which is 12% gains for us. Now we need it to go to 33 cents, which is where we make our 24%. So 33 cents is, let's just put this here, and then I'll adjust it. All right, so now we're looking for our 33 cents, which is right here. So that's our 33 cents. So this is our 24%. Yeah, it's going to be a rough week, guys. Listen. Mushroom Head is right on point. Hey, Mushroom, by the way, thank you for jumping in. I appreciate you giving us some information. Guys, very important if you're not paying attention to the dollar is very important. When the dollar goes up, crypto goes down. Like you just put that in the back of your pocket. It's 100% guaranteed. Okay, guys? So now that we have our profit here, Mark, this is where we take another 25% here. Now this basically, now we're in good profits. Now that we're in profits and we hit this second mark, this is where you would move your stop loss down to your 12% gain mark, which is 34, okay? So now you would set your stop loss, now that you've hit your second target, you would move your stop loss to 34. So no matter what happened, we're making no matter what, we're making $120 on this $1,000, no matter what. You understand what I'm saying? So now we start to ride this out, right? And this is how you use your indicators, okay? So now as you're coming down, all you're doing here is you're waiting for your indicator volume here to swap and become green, right? And now you come down, you're coming across, you get a little bit of yellow, right? And a lot of times, like at this point, like I said, now that we've made so much percentages, right, that, you know, you could say to yourself, like, man, this is so much percent right here, that if it turns yellow in here, right, and you have your RSI at the bottom, you see how this turns yellow, and then your RSI is at the bottom, meaning that it has all this room to kind of push up. Like, you know, taking profits, and this is where you start thinking of taking profits. So you're going along, and you're waiting for a green volume button, and you're just going, and you're going, and you're going, and finally we get to here. Now at this level here, what do we have? Right? We have green volume button jumped up, green volume button, RSI is on its way up. More importantly, what do we see here? We see that we have broken above the 30 moving or the 10 moving average. So this is where we would be closing out our signal, and then when this becomes a buy signal, we sell at 31.5. Let's say it jumps up here and we miss it, we sell at 31.8. Okay? And then all of a sudden, here's your trend line turns green, which means that you can probably go into a long at that time. But here's your trend. Well, that's another story. But here we go. So here's where we sell out. We sell out here at 31 cents. So let's say you're slow or whatever, and you get out at you let the RSI push all the way up, and it rebounces here and starts to push up. So you sell, you know, on this move here, right? So you're slow, right? The buy signal comes in, you sell at 31. So this right here is 31.72. So let's call it 32 cents, right? So let's just say you sell out here at 32 cents, right? Let's just call it a day. All right. So now from our original here entry of 35 cents, right? 35 cents, and our exit is 32, right? So 35 down to 32 is 3 cents, which is doubled because it's a half a penny for a percent for XRP. So this is a 6% move, okay? 6% move on a spot move. Times 10 means you have 60%, right? And what you can do, just to do the math even easier, is that every 10% you're only making 6%. So 6 times 6, right? 6% move on a spot, 6% on a 10x margin means 6 times 6 is 36. And then we did a 20x, so that means that we would do 36 times 2. So this is a 6 times 6, 36. 6 times 2, 72. So this is a 72% move, right? So let's go ahead and take a look here. And on this move, we got in at June 27th, and we sold on July 4th. So about 7 days. So here we are with a 70% move on $1,000, which means we made another 700, right? So in that 2-week period, we were able to make our $2,000. Right? And that's kind of like, that's all we do. We just chip away at the mountain. But I hope that helps you, man. I hope you guys understand that. So that's really where we're at right there. That's kind of like the breakdown of it. So guys, Mark, I appreciate you jumping in. Mark, does that make all sense to you, Mark? I'm going to close out this video right now.